Hello and welcome to Business Incorporated live on Channels Television. Here's what's coming up in the next 55 minutes. Investors brace for OPEC monthly oil market report and demand outlook. And South Sudan clarifies new $350 levy on goods imports. Kenya and Ghana attempt smooth trade with signing of bilateral agreements. Great to have you join us. I'm Ladi Williams. And yes, trading begins tomorrow. That's right here in Nigeria for the local bourse. And definitely other markets are still trading right now. I'm starting with the oil market. Now, we're seeing prices quite steady at this time, even though we're still expecting some data at this time from OPEC and demand outlook. Everyone's looking out for what's going to happen with demand for oil going forward. And we know that impacts most of the prices. So we're seeing oil steady at this time after gaining $1 a barrel in the prior session as investors are looking out for geopolitics at this time. We see Brent $90.48 a barrel and WTI crude at about 86 cents, 21 cents a barrel. See, both contracts rose more than 1% in prior session after 3 sons of a Hamas leader were killed in the Israeli airstrike in Gaza, feeding worries that ceasefire talks between the two sides might stall. To other markets now, see metal that's gold prices held steady today amid geopolitical and economic uncertainties, with potential gains being tempered by hot U.S. inflation data. Yes, we did get that inflation data yesterday, bigger than what was expected. So what happens with rate cuts in June? That's going to be discussed. For gold, $2,352 per ounce, up 0.17%. Silver, that's also up, shining much more than gold when you see the amount of appreciation between the two. $28.09 per ounce there. We see palladium, that's on the flip side, down 0.27%, $1,055 per ounce. So that's how most of the markets we track are looking right now. So to some company news, FBN Holdings PLC has announced its plans to raise up to 300 billion naira through public offering, private placement, and rights issue this year. A statement sent to the Nigerian Exchange Limited, the listed financial services group, says the capital raise would be from either the domestic or international capital market. It added that the planned raise is subject to approval by the regulatory authorities and its shareholders at an extraordinary general meeting to be held later in the month. Meanwhile, FBN Holdings said after the completion of procedures for allocating the new ordinary shares, the memorandum and articles of association of the company will be amended as necessary to reflect the company's newly issued share capital. And global financial institutions lost a total of $12 billion to cyber attacks in the last 20 years, and that's according to the International Monetary Fund. In its latest Global Financial Stability Report released this month, the IMF explained that out of this amount, $2.5 billion was lost between 2020 and this year. The international finance body claims that banks are oftentimes a primary target by criminals seeking to steal money or disrupt economic activity due to the large amount of sensitive data and transactions they handle. While citing that many factors contribute to the rise in cyber incidents, the IMF mentions that geopolitical tensions may also be a contributing factor, considering the surge of cyber attacks after Russia's invasion of Ukraine in February 2022. Meanwhile, the IMF says central banks and authorities will need to develop an adequate national cybersecurity strategy accompanied by effective regulation, supervisory capacity to strengthen resilience in the financial sector. Meanwhile, a stakeholder in the building industry, Group Chief Executive Officer of Zillus Group International, Dr. Oluwatosin, is expecting that stability in the price of diesel. There will be a degree of reduction in the price of some building materials. He made this known today earlier on Business Morning. Take a listen.
If diesel is around 1,002, 1,003, and the cost of material in terms of sharp sand before now is 63, so definitely the high cost of diesel has actually resulted to the high price of sharpsand. The things that I've discovered in our economy, although government are really trying all possible best to regulate some things, I discovered that there's a challenge in terms of price stability and also regulating price to a certain amount, because it is our country that you see things go up and it's hard to come down, despite the fact that the diesel price is going down now. So we expect that the price of all these things should start going down, the cost of materials. There are some things that made up the blocks, which we are going to use cement. All cement that are being used to mold block are all being imported, and the price of cement goes up. So automatically the price of block will go up. Price of sand go up, then automatically the price of block will go up. So, and that is the reason why you're seeing a shift in terms of price. The price before now is 180. We still have some development we've done that we bought blocks for 180. But at the moment, the price is 550 for 9 inches block. So this is definitely going to affect the end users, which are the people that are going to be buying the houses that we're building, because we can never sell the houses at the same price we're selling before.
All right, to our first conversation now. Well, it's time for OPEC's monthly oil market report. That's for March. Oil prices seem quite stable at this time. We're also going to be looking forward to what OPEC has to say about oil demand going forward. Well, Chinan Dickwell joins us now, Vice Chair, Board of Directors, African Energy Council, joins us via Zoom. Great to have you on the show.
Hi, Ladi. Pleasure to be here and good to see you again.
Fantastic. So before I got into the studio, I don't know if OPEC has released that data yet for March, but if they've not, what are you expecting for this month? We know we did get the report for February, and in Nigeria we did get that report that Nigeria's oil production did drop compared to January. So what are you seeing?
Absolutely. So it's 7 minutes past 1 now, and the report just came out dead on at 1 o'clock. I haven't had a chance, because 7 minutes in, to look at it properly, but I've just seen the headlines. So the forecast remains the same. They are rolling over the cuts that started, sort of earlier on into 2024. They're rolling it on again. So not much has changed. In terms of an outlook, they still expect that there will be demand growth of approximately 2.2 million barrels a day this year, mainly driven by India, as it were, and some of the geopolitical tensions that we're seeing right now. So I think the new thing there is sort of a geopolitical tension. 2.2 million barrels growth this year. I think approximately 1.8 million barrels growth in 2025 is what they're sticking to. So not a lot has changed. The new dimension, of course, is what's happening in the Middle East.
Yeah, and definitely we'll be looking out for how much most of these countries actually produced in March, where we get that data and actually look at it. But US CPI data, that came in hotter than expected yesterday. We see consumer prices about 0.4% for March and 3.5% over the previous year. And we know how every investor right now wants to know when the US will start cutting rates, but it seems like June is out of the picture at this point. How do you see this impacting the oil market and oil demand going forward?
In a very big way, Lani. It's a very big way. Most of us, from a personal standpoint, organizations, all that, are fatigued with the very high interest rates, as you can imagine. There was huge optimism at the start of this year and even last month, thinking that the Federal Reserve would start cutting rates around May and June and all of that stuff. And that's what we thought, because we thought that inflation is starting to taper down. Unfortunately, the CPI numbers that came in yesterday showing that inflation remains very sticky. And because of that, I think a lot of the thought, if you look at analysts and what they're thinking, moves to around September. So we're looking possibly at September. And if the cuts start in September, then it's quite possible that we may not see 3-4 interest rate cuts as we thought we'd see this year. It might be 1 or 2, I think, at the most for this year. So to that point, what does that mean for the oil and gas market? So a couple of things. If interest rates stay high, then you would understand that many companies would be very skeptical about spending, even mobility from a household standpoint. Lots of people would not go out and drive their cars because interest rates are very high and therefore cost of fuel is really high. So ultimately, you would have you'd have an impact on demand, on oil and gas demand. So if we're not careful, with a very high interest rate, you could start to see some sort of demand destruction at some point. I think that could be the impact. And of course, if demand drops, then of course the price of oil and gas will come down. You just said it there, Laddie, at the start of it. It's approximately 90.4 today, dollars per barrel for Brent. But the reality of it is, what happened in the Middle East yesterday in the early hours when we saw the airstrike there in Gaza, the price shot up almost to about $91 per barrel. At the back of this interest rate cuts, we're starting to see the prices coming down a little bit because analysts are starting to price that in.
Right. So is it possible that if we don't get a cut this year, we know the U.S. Fed keep pushing that can, forward. Is it possible that oil prices could still stay, elevated above $90 a barrel and maybe touch that $100 mark?
Laddie, it's we're talking a lot of doom and gloom here, yourself and I, and it's just the reality of the world today. Is it possible that we'll not see interest rate cuts this year? You know what? It is possible. We hope that does not happen because we've seen the Fed push it back several times. But the reality of it is, if we come to around August and we see that inflation is still sticky, then there's a big chance that the Fed will not cut, to later part of the year, or even not cut at all. Or in fact, worst case scenario, you go back into real quantitative tightening, which would mean starting to increase interest rates again. We're hoping that that's not the case. But either way, whether it's a case of quantitative tightening, QT, or a case of prolonging the interest rates, what that does for the oil and gas markets is a case that it affects demand for crude oil. So it's very possible that the price of crude oil would start to come down. Now, I say that caveating it because on the flip side of it, you have what affects supply. So from a demand side, the fiscal policy, the monetary policy could affect that and affect demand. On the supply side, then, are the geopolitical tensions that we're seeing in the Middle East. The war appears to be escalating quite a lot. In fact, right now, there's a huge potential on supply because Iran is threatening to hit Israel at the back of what happened yesterday, the attack on Gaza, where 3 children of the Hamas leader were killed. There's that threat. And if that happens, then you might see that a huge escalation, the conflict happens, and ultimately that would affect the oil price.
Right, and definitely escalation at this point means higher oil prices.
Absolutely. So if that escalates, I think, so if you think about it, I think from a pure play analytical standpoint, Maddie, when we think about the real factors that affect the oil price, there are a couple of things. One is geopolitical tension. It's by far the biggest variable in our models that affects the oil price. The second to that then is demand growth. Mainly in the last few years, it was China was driving the demand growth in a very big way. Right now it's India. India is the unicorn. It's the new unicorn we're seeing that's guzzling a lot of this oil, so becoming much more important. So these two factors are really, really important. But I think by far, it's around geopolitical tensions. If Iran undertakes an attack on Israel, bear in mind Iran is an OPEC member. If it undertakes an attack on Israel, the conflict could escalate quite a lot, and that would mean very high oil prices. And you can see that many banks are pricing that in already.
Right. Let's look at output now for Nigeria in February. That came in lower. That's according to OPEC. Compared to the month of January. So we see Nigeria did have their own number when it comes to output, and OPEC did release their own about lower than what Nigeria actually did put out at this time. Why do you think we have that kind of disparity between the oil production numbers we're getting from Nigeria and OPEC?
Yeah, that is a very complex situation, and it really shouldn't be a place for that. There's huge opacity in our system. There's a huge opacity in our system. And I think that's what's driving this, the disparity you're seeing here. So just to caveat that, OPEC in the month of February, what they had for us was about 1.3 million barrels per day. Now that number, it's not just a pure play number that's based on just international market oil sales. It is international market oil sales, but it's also, sort of secondary numbers from traders and, S&P Global and several organizations that provide that number. So it's a 3-dimensional. They take it from several sources and provide that. There's a lot of fidelity in those numbers. There's a huge amount of fidelity in those numbers without a doubt. So when you see the Nigerian government put up a number and say 1.5 or 1.6, the real question is, what does that even mean? What has been sold? And honestly, I don't want to comment on these things because, an investigation needs to be undertaken, but it's just very opaque. And it just doesn't make any sense for us to say we're overproducing. Now, and if we are overproducing, where's that delta? I think a bit of a investigation needs to be undertaken before we can make comments on that.
Right, definitely looking out for that. But International Energy Agency, we're going to get their oil market report. That's due, I believe, on Friday. What are you expecting?
So, Lally, this is a very interesting one, I've got to say. You would realize, you've been covering this for a long time, so you recognize this, that the IEA and OPEC have, in the last few years, always been in tandem. Their oil price forecasts have been in tandem. Their renewable energy forecasts have been in tandem. Unfortunately, the last, I'd probably say 6 months ago, maybe a year ago, they've started part. The IEA see peak oil happening before 2030, 2028, to be precise. OPEC is very bullish. To 2030, OPEC is incredibly bullish. It thinks oil price will go to 116 million barrels per day. So really much higher than we are today. Today, approximately 1 or 2, roughly. So there's that disparity. In terms of what they will put out, I think, they would probably taper a little bit of their forecast on renewables. They've been incredibly bullish on renewables the last few years. And they've been saying it would, hit, parity with conventional this year. Sorry, I apologize, in the next couple of years. But I think just from what we're seeing, Laddie, without being long-winded, EV sales are slowing down. We saw that. BYD, 40% less EV sold. Tesla, 20% less EV sold. We're seeing, big companies pushing back. Saudi Aramco saying that the energy transition faltering. We're seeing slightly low investments into solar. So all of these things, I think, will bring some realism into it. I think you'll see that their renewable energy forecast will decrease a tiny bit from where they were before. But overarchingly, let me say this. The fact that we're seeing some of these headwinds in terms of clean energy, it does not necessarily mean that it's slowing down. It's completely normal in every cycle that things don't just go up like a rocket. They go up and come down and all of that. And that's just reality of the market we're in.
Yeah, we definitely have to remember the cycles. They always have to play out at this time. But let's look at Nigeria. Now, we've seen the Naira actually strengthening. We've seen interventions by the CBN. But at the back of that, we do need to also get inflows, from oil, at this time. Talk to me about what you're seeing for Nigeria's oil output in 2024.
So this is a very interesting one. I think the start of this administration, there was, they put out a huge amount of forecasts, reaching 2.6. So the plan was to take our oil output to about 2.6 million barrels per day. At the time, we were lower, probably 900,000 barrels per day or 1 million. So there has been a very positive step in moving it to about 1.3 and 1.4, which is sort of where we are today. But for us to generate the foreign exchange that we need to stabilize the Naira and get it to a very high level, I think a lot of unconventional thinking needs to go into it. I think, we need to curb, like we are doing already, oil theft. There was a huge amount of progress that was done there. But honestly, my feelers, some of the things I'm seeing on ground and discussion I'm having with people in the Delta, it sounds like it's starting to pick up again. There's a huge amount of Nigerian barrels that are being sold on international markets today. They're sort of unaccounted for, so that needs to be plugged. But beyond that, it's the thing of looking across the entire value chain and plugging some of those. So to your point, would we see the consolidation of the Naira, going forward? I think optimistically, that's the hope. If we can increase our oil production to even 1.6 million barrels per day, then I think that will generate a huge amount of foreign reserves and bring some stabilization to the Naira, in addition to what the CBN is already doing. Now, just put this out, actually, Laddie. Think about this. For Binance alone, the cryptocurrency platform, the central bank governor said that was approximately 26 billion USD that was leaving the country a year. $26 billion was leaving Nigeria through the Binance platform a year. That's seismic. That is seismic. It's a huge amount of money. So now that that's been plugged in, and I think some of the fiscal measures and interventions that we're seeing the central bank making, if you couple that with an increase in oil production, and hopefully oil price stays reasonably high, above $75 per barrel, which is sort of our fiscal break-even for Nigeria, then I think we'll start to generate enough foreign exchange to stabilize the naira, pull it down to sensible levels.
Right, definitely looking forward to that. Thank you so much. Always great having your perspective, Chinan Dekwo, Vice Chair, Board of Directors, African Energy Council. Thank you so much.
Pleasure. Thank you.
All right, we'll take a break now. When we come back, Anita will give us details from the markets. Remember, the bourses open tomorrow right here in Nigeria. Stay with us. Welcome back. Well, let's head straight to the markets now. We have Anita with the details. Yeah, we're getting that the final trading day of the week tomorrow. It was a holiday shortened week this week. So definitely the first trading day this week. That was
the last day and the last for the week.
So who knows? Maybe again tomorrow. Maybe, just maybe.
Well, Ladi, it's interesting to note that, of course, we're still talking about the holidays. Regional markets across Africa, except for the Johannesburg Stock Exchange, which was in the red 0.65%, but other markets that we track, Egyptian Stock Exchange, and just Stock Exchange, as well as the Kenyan Stock Exchange, they're all observing the Eid holiday. And then so far, since last week, Nigeria's stock market has been on a losing streak, mostly no thanks to big banks being the ones that were they were mostly hit by the impact of stockbrokers, shareholders, and investors taking profit.
Yeah, that's the most liquid counter.
And almost 800 billion naira knocked off from the market capitalization. And of course, the market's all-share index is almost below the 103,000 level.
Right.
So, but for tomorrow,
I'm sure investors will be itching to get back to the market tomorrow. Yeah. Definitely see how this.
At the same time, we just hope that the market doesn't fall below the 103,000 points, because it's just hanging by a thread.
Yeah, I know you really like that 100,000 level.
Exactly. All right. So now, before we go to our guest, let's talk a little bit about FBN Holdings, which has announced its plan to raise about 300 billion naira in capital raising. They sent a letter to the Nigerian Stock Exchange just before the markets went on holiday, so that they said that they intend to raise this amount through public offerings, private placement, as well as rights issue for this year. And so they also add that the planned raise is subject to approval by the regulatory authorities and its shareholders at an extraordinary general meeting set to be held by sometime later this month. So they also said that there would be the capital raise is expected to be raised either by the domestic market or the international capital market. So we'll be keeping our eyes out on how that plan goes into effect by FBN Holdings. So, and then, of course, we'll be talking about the U.S. market, this U.S. stock market. So let's take a look at the U.S. stock markets first. The stock futures, they fell. They were in the red mostly for today. Of course, we'll be looking at how it turns out for the end of the day. The Dow Jones Industrial Average, 1.09% for the stock futures. S&P 500, towing the same path, 0.95%, almost 1% down. And then the NASDAQ, also 0.84%. And this is all coming on the back of the release of the Consumer Price Index, which is also the inflation numbers, which came out hotter than expected. Initially, it was expected to be about 0.3% month on month, but it came in at about 0.4% month on month. And then, of course, 35.5% in year on year. So that had an impact on the market. And at the same time, we're expecting that sometime right about this time, that they will be releasing the Producer Price Index for the market. That is also expected to have an effect on the market, either positive or negative. But so far, the markets will also be expecting the earnings season to continue. By tomorrow, we'll be expecting Wells Fargo, Citigroup, as well as JP Morgan to release their quarterly results. That's for the first quarter of 2024, sometime tomorrow. So we'll be eyes out for that for the market. And let's move over to the Asian markets. Major bourses in Asia, they also reacted negatively to the U.S. inflation data. Of course, when the U.S. catches cold, when the U.S. sneezes, the rest of the market or the rest of the economies catches cold. So this is how it affected the Asian markets. The Nikkei down 0.35%. Kospi was slightly in the green, 0.07%, while the Hang Seng Index is in the red, 0.26%. For the other sides of the market, we see the Shanghai being slightly in the green, and then just by almost about 0.25%, and the Australia's stock exchange index, the ASX 200, almost 0.5%, 0.44%. So at this time, they're also really reacting to that U.S. Inflation data, and at the same time, they also expect that this will tell what direction that the interest rates by the interest rate direction, which will be carried out by the U.S. U.S. Federal Reserves, when it will happen. Of course, they've been looking at the inflation, the interest rate, which is on the high side. So how long will this continue? How long will investors be holding on to the higher interest rate? But already some analysts are expecting that we'll be expecting this rate cut to come in maybe sometime by July this year. So, but for now, there's just no sense of direction for the market yet. At the same time, you might be surprised because the U.S. already somehow was also expecting that the rate cut might come in much faster than the ECB. Already, the ECB will be meeting today to decide on its monetary policy sometime later today on Thursday. So, Ladi, that's it for the markets. Markets are still on holiday. Middle East, Africa, and then some other countries. For the rest of the week,
right? And I'm guessing
nothing much to report.
I'm guessing the reason why I had that negative data there for the U.S. markets there, definitely because of that hot CPI data, and apparently, 1.09%, the Dow Jones Industrial Average, that's the futures, that's already trading down today, and we're expecting another inflation data, that's PPI,
that's a Producer Price Index.
Index. But now it's all about when we're going to get the first rate cut in the U.S. But at this point, it seems like June, that's out of the picture. At this point with this inflation data we're seeing at this time. So I'm wondering what's going to happen. If we don't get that rate cut, does it mean these markets are just going to keep going down? For the year, or is there another catalyst, waiting somewhere for these U.S. markets?
Well, Ladi, we're already in the second quarter, and before you say Jack Robinson, the second quarter will be over. We're talking about July. One of the analysts who spoke with some foreign journalists, he mentioned that he's expecting that the U.S. might cut the rates in July, which is the start of the third quarter of 2024. So give and take, if this happens, you never can tell. Although it will have a longer impact on the markets, because higher interest rates is really taking its toll on many economies. Even in Nigeria here, when the Central Bank Monetary Policy Committee raised the MPR, the monetary policy rate, to very one of the highest level ever for Nigeria. Already the manufacturers as well as the organized private sector, they're already complaining about it, that it will have a negative impact on the country's production output as well as the cost of of items. So definitely the impact is really being felt. But in July, let's just wait and see if that first rate cut by the U.S. Fed will come.
Maybe they might just spring that rate cut, on the market at some point.
Just give us some surprise.
See. Thank you so much, Anita, for giving us the details there. Pleasure. And the local bourse and most of the global markets that we track. Let's take it on to Europe now. See, the German population is set to increase slightly by 2040. That's according to a new study. That's despite falling birth rates. Join us to speak about what that means for the economy is DW correspondent Chiponda Chimbelu in Berlin. Thank you for joining, Chip. So what are some of the highlights here?
Thanks for having me, Laddie. 500,000 more people will be living in Germany by 2040. Now, that is according to a study by Bertelsmann Foundation. By the end of last year, there were 84.4 million people living in Germany, the EU's most populous country. Now, despite the projected increase, the demographic development will vary significantly between regions. The population is set to decline significantly in most of the federal states of Eastern Germany, while increasing rapidly in some parts of Western Germany. Also, many people are expected to move to cities. Now, that is a trend that has already begun, and it is set to intensify over the coming years. But one of the most worrisome developments is that Germany's population will be much older. More than 1 in 4 people living here will be 64 or older by 2040.
All right, how will the aging population affect Germany's economy?
Well, Germany's birth rates have been below replacement rates since the 1970s. There are fewer workers entering the workforce than there are workers retiring. In 1962, there were 6 workers for every retiree. Today, there are around 2 workers for every retiree. And Germans are also living longer. Now, that puts tremendous pressure on the country's pension system because pensioners are drawing from it for a longer time than decades ago. And that's not the only challenge. The fact that the population growth is uneven will put pressure on resources in the cities that expand. Already, Germany has a housing crisis in the leading urban areas. That will be, of course, including Berlin, Hamburg, and Munich, where it is extremely difficult to find an apartment. And of course, rents have also risen significantly. Other infrastructure will also be needed to support the growing population. German lawmakers will certainly have their work cut out to deal with the demographic challenge of the coming years. While they're trying to encourage skilled worker immigration and reform the pension system, economists say they need to be doing more.
All right, what are you seeing in the markets in Europe?
Well, Laddie, very little change is expected in today's trading here in Europe. The markets may be struggling to find direction after U.S. inflation data on Wednesday. American consumer prices grew more than expected in March. They rose 3.5% compared to 3.2% in February. Now, that obviously dashes hopes that the U.S. Fed will begin loosening its monetary policy anytime soon. Investors will shift their focus to a European Central Bank meeting today. The ECB is expected to hold its key interest rate at 4.5%. But traders will also be watching for any signals that the central bank may begin cutting interest rates in June. And in terms of data, here in Europe, Italy's industrial production is due today, and in the US, the March producer price index figures will be released.
Yeah, definitely looking out for those figures. Thank you so much, Chipana Chibelu. Giving us the details from Europe. Thank you. Let's take a conversation forward now. See, reviving Nigeria's oil and gas sector is important to improving foreign currency inflows into Nigeria. Well, let's explore the prospects of project management in developing Nigeria's energy sector. Joining us now for that conversation is George Samani, Managing Director and at Project Management Institute. Great to have you on the show.
Hi, thanks a lot for having me. I really appreciate it, and greetings to the viewers as well. It's
Great,
a pleasure
great
to be
to
here.
have you. Great to have you. So we see Nigeria's vast energy resources, yet we're facing significant, energy deficit. What are some of the key challenges, hindering the development of Nigeria's energy sector, in your view?
Yeah, thanks for that. I think let me just start with some context, and then maybe even from an optimistic perspective, right? Because we'll talk about challenges. We know, of course, Nigeria's got incredible potential when it comes to energy production. And when you look at, for example, Nigeria's energy reserves and the quality of the type of energy produced, it's like second to none. And also when you look at the incredible work that organizations like Dangote are doing, building the world's largest single train oil refinery, when you look at some of the renewable innovations that are coming out of entrepreneurs, right? You can't not marvel at the potential. However, as you rightly mentioned, there are challenges. So between now and the time that we sort of like realize this optimism, we've got to deal with some of these challenges. And specifically to your question, what are they? Right? We know that we currently don't generate enough power. And even if we did, we actually don't have what it takes to distribute it across the entire country. So it's an infrastructure challenge, the infrastructure to produce and the infrastructure to distribute the power. And this is why, of course, there are power cuts if you're connected to the grid. And if you're in a rural area, then the likelihood is you're not connected to the grid in the first place. So yes, it's a difficult challenge. And these things obviously affect our well-being and everyone's life potential, right? Everyone's just trying to live their lives to the best, but some of these things are hindrances. The other challenges, really, you could say, are related to fixing this first challenge. So challenges like the funding constraints, right? Where are we going to get the money to build energy infrastructure, right? In addition to that, you've got the challenges of national policy and regulation. How do we ensure that there are strong enough systems and processes in place in Nigeria to create the best delivery and investment environment for the energy sector? And then finally, you've got to look at skills, right? The skills gap challenge. We need a lot of people, and those people need to be able to deal with complex projects, right? Because the energy projects are complex, and the challenges themselves also throw a different layer or another layer of complexity into the mix. And the thing is, I think it's worth pointing out that this is not just a problem that's unique to Nigeria. If you look at a country like South Africa, pretty much just a generation ago, there was no such thing as power cuts. Now they have them, and we're seeing that in other African countries. So it's an Africa problem, and this is probably why this is one of the African Development Bank's high five priorities. And really, if we're able to successfully address these challenges, I think we're going to see meaningful progress in our continent.
Yeah, it's quite interesting, seeing power cuts, in countries like South Africa. I'm sure they're definitely not used to that, at this time. But how do you think players in Nigeria's private sector can help in building, a strong pool of skilled project managers, specifically, for this energy sector?
I think it's about collaboration. The same response I gave about a year ago on this same show. We've got to work a lot more together. So what we do at PMI, Project Management Institute, we're the global body behind the profession of project management. And really our purpose is all about providing that project management skill, because it's project management that helps you get from A to Z. And in going from A to Z in the best way possible, you're able to deliver on your objectives. So as a country, what are our objectives? Economic growth, right? Social improvement. And so we as at PMI, we work with government, we work with private sector, we work with youth and education. And so it answers to your question, the collaboration is actually very, very important. For instance, working with governments. I'll give an example of the South African government. Back to South Africa, we partner with the government there, collaborating with the government there. The regulator for construction projects has adopted our standards, and what we're doing is we're working together to help to improve project management capability within the country. In Nigeria, we're partnered with some of the largest construction companies and energy companies there as well, all about upskilling the workforce so that people who are working in project management are able to work side by side with subject matter experts and also, for example, the corporate leaders to make sure that the execution of the vision comes to pass. Because that's what project management is, as I said, getting from A to Z in the best way possible, which means executing on the vision, making sure that the vision is being executed.
All right, is having skilled, project managers, is it that silver bullet that can, help, any country's energy sector at this time, or a country like Nigeria?
It's definitely not a silver bullet. And you only have to look at the list of challenges to see that it's not a silver bullet. Sticking to the gun analogy, it's one of the bullets, right? Because you're going to have to take more than one shot. We talked about the challenges of infrastructure, challenges of funding, but the challenge of execution is absolutely one of the challenges that you're going to have to deal with, because you can have all the money, but if you don't have that execution capability, your money is going to be wasted. You can have all the regulation in place. If you don't have the execution capability, your money is wasted. You can have all the infrastructure. If you don't have the execution capability in place, your money is wasted. So it's not a silver bullet. It's one of the 3 or 4 or 5 silver bullets that you need. You will need all the bullets.
Yeah, definitely need all the bullets, for this industry at this time. Well, are there any specific programs or, initiatives that could help in addressing these capacity needs of Nigeria's energy sector?
Yeah, there's several, right? So, I'll just name a few, but, there's a long list. So I'm not going to go through. Just if we start with the actual skill itself, again, speaking from a point of view of project management as one of the silver bullets, the key thing is the skill to help your team. And in the energy sector, we're talking about large teams. We're talking about teams of hundreds of people, in some cases, maybe thousands of people. We're talking about millions or billions of dollars, right? And so you need that skill to be able to coordinate large numbers of people, coordinate large amounts of resources. You need the skill to manage risk. You need the skill to be able to see things through to the end. And we are able to provide that skill, and we are providing that skill to various organizations across Nigeria. So, and that skill is provided through professional communities that we lead. For example, PMI Nigeria chapter, that skill is also provided through certifications and training, for instance. So we have the world's leading project management certification and training, certifications like the PMP, Project Management Professional. In addition to some of these core certifications, we also look at, okay, what about industry-specific certifications? If you look at the energy sector, one of the largest areas within the energy sector is construction. But if you look at the construction sector in the last 30 years, there hasn't really been much development or advancement or even growth. But it is actually one of the biggest globally. So we looked at, okay, what can we do within the construction sector as a driver for progress within energy and other sectors? And so we partnered with some of the largest construction training companies, some of the largest construction companies themselves, companies like Aramco, US Army Corps, construction companies from all around the world, to identify within the construction sector what are the 3, 4, 5 key areas of focus from a skills perspective that will move the needle when it comes to efficiency. And we've come up with a new resource construction professional certification that is created jointly with industry, as I mentioned, in order to be able to create these efficiencies. Because guess what? The research shows that like a 1% improvement in the efficiency of construction projects could give you literally hundreds of millions, if not $1 billion in savings on average globally. So there's a lot to be said about specific efficiency gains through project management within the construction, which of course is a huge part of energy. Some other initiatives that we run are, again, professional community initiatives. So for instance, we run the largest gathering of project managers in the world, the PMI Africa Conference, which is held every year. This year it's being held in November in Kigali. And so, again, it's a long list. I'm not going to go through all of it, but there's several initiatives that we're undertaking, including, as I mentioned earlier, working with government, working with corporations, working with the youth and academic space to highlight and to partner on delivering that project management capacity building across Africa.
Right, and I'm guessing, someone who doesn't have experience, with project management, they might be looking at this skill as something they might want to actually venture in. How hard is it, getting, how hard or easy is it, getting this skill? Or what do you have to do to actually, get ahead, at this time?
Sure, a great question. So this is a professional skill. Like many professional professions, you can start from the beginning, or you come in the middle or advance depending on where you are. So there's a journey that's available. In other words, if you're at the beginning of a journey, if you have no experience in project management at all, log on to our website or visit the PMI Nigeria chapter, and you can start from the beginning, the basics, right? You've got CAPM, which is Certified Associate in Project Management. It's a foundation level certification in project management. If you're in the middle of your career, most people in the middle of their career are looking at the PMP. That's the Project Management Professional certification. It's a gold standard globally when it comes to project management. And then you have other specializations. So if you're already in the field, or you want to specialize, or you're looking for specific focus, I mentioned the construction certification. You can dive straight into that, or you can look at PMOGA. That's the Global Alliance, Project Management Organization, Global Alliance. And this is all about looking at, how do I build a PMO? How do I lead project management from that high level? So the point is, we have something for people right at the beginning of the journey, all the way to those who are experienced and who are looking for specializations.
Right, and going forward now, what are you seeing for Nigeria's energy sector and this skill of being a project manager?
Yeah, the previous speaker, Chinan, he talked about the effect of some of the geopolitical events on the energy sector, and how much they contribute to fluctuations in the energy sector, like what happened in the Middle East yesterday. It's super critical. And one of the key skills that a project manager needs is risk management. How do you plan for these sort of things? Of course, something like a war is very difficult to plan for. And even if you plan for it, you may not even appreciate the extent of the impact it's going to have. But the role of a good project manager is to be able to get ahead of these things, to be able to understand these things, and to lead your company to be able to navigate through some of these risks, some of these challenges, and these issues when the risks materialize. And so we, as PMI, as I mentioned, our vision and our purpose is to upskill the continent, in this case Nigeria, so that we have more project managers that can drive some of these things, that can drive some of these companies, that can drive some of these industries through helping with the execution of the vision, and also protecting the journey through things like risk management, stakeholder management. So to answer your question in terms of what's the future of energy, that really depends on how well we're able to provide the skill set that's needed. We hope that the future is bright. This is what we're working towards in partnering with government, partnering with private sector, and partnering with organizations. As I said at the beginning, everybody knows Nigeria's potential is incredible, right? And we are just one of many organizations that are committed to Nigeria and committed to Africa to help to make that a reality.
All right, definitely wish you luck going forward, and I hope Africa actually lights up, at some time. It was great having you. George Asamani, Managing Director,
Thank you.
PMI. Thank you.
Thank you. Thank you.
All right, let's get some stories now. City Mombassa's monitoring station, National Revenue Authority of South Sudan, has clarified that only exporters and importers will be required to comply with the payment of $350. That's about 46,000 Kenyan shillings levy being charged per unit to all goods destined to South Sudan and not clearing agents. The agency is responding to a petition by clearing agents, clarifying that a clearing agent should not use his own funds to pay the service charge this time. However, the Mombasa monitoring station, National Revenue Authority of South Sudan, said that the ECTN certificate was a mandatory document to be obtained by importers, co-signees, and exporters of cargo into and from South Sudan. I will see Kenya and Ghana are looking to revive trade between them. They say their vast deposits of gemstones and prized agricultural products are key to boosting their commercial partnerships. On a state visit to Accra, Kenya's President William Ruto and his host, Ghana's leader Nana Akufo-Addo, witnessed the signing of several bilateral agreements and a memorandum of understanding. Both countries are looking to a smooth trade under the AFCFTA. All right, let's get a quick check on the crypto market. Now we're seeing Bitcoin not looking so bad, at this point, back to about that 70,000 level after falling below that yesterday. So we see the greed, the fear greed index right now printing 76 points. That's still extreme greed in this market. So everyone's investors want to know where the top will be, for this market. Definitely looking out for what's going to happen next in this market, but still a very greedy market. Let's look at some headlines now in the crypto space. We see Uniswap, they're bracing for SEC legal battle that's in the US. They received a Wells notice from the SEC indicating an upcoming enforcement action. The announcement led to about 16% drop in Uni's value. That's a token for the Uniswap decentralized exchange, dropped from about $11 to $9. Uniswap Labs founder Hayden Adams expressed readiness to challenge the SEC, possibly up to the Supreme Court. Now we see Bitcoin mining difficulty that hits a record high, about 86.4 trillion, and that's just before the halving. And definitely, we know the halving makes it difficult to mine more Bitcoin. The difficulty of mining Bitcoin continues to increase in anticipation of the historic halving event, which is currently in the process of reducing miners' incentives by about 50%. So that's a big number. Then South Africa, the South African regulator, they've licensed Luno. That's one of the cryptocurrency platforms there as the country's largest and oldest crypto asset service provider. The license will help them operate as a financial services provider, that's in South Africa. All right, let's bring in Gilbert Jopata now. He's a team lead right there. Joined us, also financial market reporter right there. Great to have you, Gilbert. Talk to me now. We see value days destroyed. That's an indicator, has signaled the top of this bull market. And I'm wondering, is the top in at this point?
All right, for value days destroyed indicator, just like any other indicator out there, it is my view that readings are useful, but they shouldn't always be taken at face value because they are always subject to interpretation by an analyst. And this isn't the first time that the value days destroy indicator is signaling the top of the market. We've seen this happen before where the value day indicator signal market top, and yet the market moved ahead with the surge, leaving investors who were taking the indicator for what it is. Just like I think 2 years ago, that was January 2021, when Bitcoin was sitting at about $40,000. This same indicator signaled a market top, and yet we went ahead to still see over a 61,000 BTC in March, which is at about 52% gain from where the indicator initially called the top. For value day, I actually know that value day is actually signaling the top as a result of Grayscale Trust, shedding away over 15 billion in assets. I think this is what skewed the indicator. But then whether the bull market is over, it requires more of a comprehensive analysis, which will include macroeconomics, investor sentiment. We still look at market structure and then price action. So for retail investors who may be thinking alone, this is why there is always need for market analysts out there who could always interpret most happenings in the marketplace. And then, in the cryptocurrency industry, we don't just exist alone. We exist in communities. And I think that's why there's also need for retail investors as well to also be members of reputable cryptocurrency communities for traders and investors, because they just can't think alone. It is always good you move into this market with like-minded investors and also gain access to expert guidance and analysis.
Right. All right, Gilbert, before I let you go now, very quickly, Uniswap received the Wells notice from the SEC with charges, imminent. How do you see this impacting Uniswap?
Okay, whenever I look at regulatory development and then landscape, I like looking at it as somebody who is coming from the future. Because even though we are global players, wherever we are in the world, we are citizens of different countries. And then there is also our country as well. It also has its own regulatory structure it may as well build. So the Uniswap have decided to challenge this in court, to the highest order. But then when we look at what's happening, I think the SEC is just trying to assess dominance in the market. There is more of a dominance between the commodity markets and the SEC, because they are looking for whose jurisdiction is this to regulate the market. But then, and I think the more cases the commodity regulators have, the more they assess dominance in the market. Likewise also for the SEC. But then when I look at it as somebody who is coming for the future in our own country, when we look at the regulatory development in Europe, then I think entrepreneurs here in Nigeria can start to assess and decide not to do certain things that have been seen to be wrong when you look at Europe. Likewise, also our regulators here in Nigeria, once they build a more solid regulatory landscape, I think we could learn from Europe to build a more better industry here in Nigeria.
Right. I guess it's all about regulation for the crypto market, and the decentralized exchanges are not left out. Thank you so much for joining us, Gilbert Jopata, lead analyst at Smart Investors Launch. Thank you so much.
Yeah, thanks for having me.
All right, so that's the show today. The market's open right here in Nigeria. Tomorrow, we're going to get a sense of how the market's going to play out and how investors are going to play in that market. That's tomorrow. Thank you for watching. You can visit channelstv.com for more updates. You can also watch this again on YouTube. I'm Ladi Williams from Media Team right here at Channels HQ. It's bye for now.